The stock of the day is brought to you by IG, Australia's #1 CFD provider. Trade over 17,000 markets with extended trading hours on key US shares and competitive spreads, all on an award-winning platform. Get started at IG.com.
All right, stock of the day, Sigma Healthcare reported this morning. Net profit shrank 67%, 3.7 million for the half year ended 31st of July. Company points to a competitive, quote-unquote, market segment. Also, the competition regulator has again extended the deadline to decide on the merger of Sigma with pharmacy giant Chemist Warehouse, with the call now expected later in October. They're taking a long time with this, aren't they? Let's see how the share price is reacting. Down about 4% on the news this morning. Philip, how are you reacting to it?
I'm surprised it's held up so well. I thought it would be down further because they gave it's a complex business. They've won back a large part of the Chemist Warehouse contract that they lost to EBOS a few years back. So there's a big contract coming through. So analysts are trying to work out what that means in terms of ramp up. They had a pretty material 100 mil plus working capital drag to fund the inventory needed to service that contract. And the outlook statement was very weak versus consensus, guiding to EBIT for FY25. They're a January year end, and FY25 EBIT of 50 to 60 mil, which is almost 30% below where consensus was at 75 mil. So either conditions are tough or analysts were being too optimistic about how quickly the Chemist Warehouse contract ramps up, probably a bit of both. You see those headlines, you think stock should be down 20, 30%. It's not because of the mystique that is Chemist Warehouse. As a comparable, before about an hour ago, it was on 32 times PE. You can buy EBOS at 22 times.
Right.
Historically, it was the other way around. So people are paying up to buy this great business that is Chemist Warehouse. My opinion remains you are overpaying for a great business. We saw another great business today, Premier Investments put out a weak result, stocks off nearly 10%. So great business isn't necessarily a great investment. So for me, people had paid too much for this in the lead up to the result. You saw major shareholder trading down, or, read into that what you will, but the insiders were selling into this result. The outlook is complex. Retail sales for pharmacy have actually been pretty good, but I continue to think it is not a done deal for the ACCC to wave this through. Has been extended to October. For me, it's not about the number of stores they have combined, which will be large. For me, the main issue is that Sigma, as it stands at the moment, is one of the three main pharmaceutical wholesalers who are licensed to wholesale pharmaceuticals, the other being EBOS and Priceline or API, which is owned by Wesfarmers. One of the only three players to be partnered up with the largest retailer in the market arguably lessens competition. Think about the information Chemist Warehouse would have on their competitors if they're also supplying their competitors. I can't see how the ACCC lets that go through. But it's not dead yet, it just keeps getting delayed. So
it's had a massive run up.
Fantastic.
So you're saying take your money and run?
Yes.
Consensus, so sell.
As of this morning, consensus price target was $1.20. I think they come down because of today's outlook.
Right.
How much will they come down? $1.10, $1.05, $1.15, who knows? I would just say sell because the result.
So would you go into EBOS?
I like the pharmacy space. EBOS, I think, is worth a look. I wouldn't necessarily sell Sigma to buy EBOS and treat them standalone. I would just sell Sigma and take the money and run it. $1.45 or whatever it closed at. That's just overpaying for a great business. I would have a look at EBOS because I actually think EBOS will be a beneficiary should the merger go through, and it might. There's of the over 5,000, 6,000 pharmacies in the country, about maybe a quarter are independents. Anyone who's currently a customer of Sigma under their own brand, Phil Pepe Pharmacy, not Amcal or Guardian, will they want to be supplied by the same company that owns Chemist Warehouse? Probably not. So they can either go to API, which is owned by Wesfarmers, or more likely to EBOS, will be looking to win back some share they just lost. So I think EBOS will be a beneficiary of the merger should it go through. Not convinced it'll go through, so I would buy EBOS on that basis.
Okay, Michael?
EBOS isn't one we've ever held. We haven't really had much exposure to this sector at all over the years. We just find it to be pretty competitive, fairly low margins, and that's always been a concern for us. Today's result from Sigma was underwhelming across the board, really, and there is obviously a few moving parts there, winning back this new contract. So Look, from our standpoint, the major driver from here for this company is going to be the ACCC decision. The longer it drags on, it's obvious that the ACCC has some concerns. They flagged that in their initial findings, and I just think the longer it's elongated, this process, the less likely it is to go through. It would create a vertically integrated wholesaler, and as pointed out, it's at the moment they're selling to all these independent pharmacies. Then they'll obviously be providing supply to Chemist Warehouse as well, and it's just not something that is conducive to competition. So that is the biggest sort of elephant in the room, what happens with the ACCC, and there's a big risk, in my opinion, that it doesn't go through either. So I'll be selling at these high levels as well.
Okay, so do you think the share price reflects a yes from the ACCC or
Without
a sideline? Yes.
The share price consensus earnings has got this as a fait accompli.
As a done deal.
So
Okay.
the risk is to the downside.
And depending on which analyst you sort of speak to, it's sort of 30 to 50% of the valuation in the price at the moment.
Wow.
And that's if the ACCC doesn't go through with the approval.
Gee, it's a binary decision, isn't it?
In many ways,
Hell.
yeah.
All right, okay.
Yeah.
All right, okay, that's really good analysis on a stock of the day, which is Sigma.
To you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.